Bitcoin, cryptocurrency, blockchain technology. It's hard to have not heard these terms over the last few years. There's not many things that get talked about so much, but are then so misunderstood by the vast majority of people. Until now, I've been very much sat in the camp of dismissing cryptocurrencies and Bitcoin as just speculative assets, and actually delivers no more value than gold. To give you a quick summary of how I used to feel, I've got a clip here from Warren Buffett talking about his thoughts on gold, which actually reflected my thoughts on cryptocurrencies and Bitcoin.
But you can take a broader example than that. If you buy an ounce of gold today and you hold it 100 years, you can go to it every day and you can coo to it and you can caress it and you can fondle it and 100 years from now you'll have 1 ounce of gold and it won't have done anything for you in between. If you buy 100 acres of farmland, it will produce for you every year. You can use that money to buy more farmland. You can do it all kinds of things. For 100 years, it'll produce things for you, and you still have 100 acres of farmland at the end of the 100 years.
Why on earth would I want to use my capital to buy cryptocurrencies when I can buy perfectly good businesses that produce goods or services? I'm still not a fan of gold, so why would I bother considering cryptocurrencies? Before I get into the video, if you're not interested in investing, finance, or income growth, then please consider subscribing to the channel. There are 2 pieces of information that have caused me to challenge my mindset on how I view cryptocurrencies. The first comment came from Andreas Antopoulos, and if I've really screwed up your surname, I'm sorry, but I've tried to record the surname about 10,000 times, so if you're hearing this, this is the cut that made it. In an interview with London Real, he said, and I quote, "If you were introduced to the internet in 1992, then you may make the obvious mistake of assuming that the email is the internet. And for a time, the email and the internet are indistinguishable from each other. It's not until 1995, when the web has come along, that you now have 2 major applications on the platform. That then allows you to see the platform. Until then, when there was only one application, you confuse the application and the platform. Bitcoin, the currency, is email. It's not the real invention. It's the first application of that invention, and there's a whole set of applications that can be built on top of that. So, Bitcoin isn't the exciting part, it's the underlying technology. It's like staring at email and trying to get excited about what it does." The second came from understanding the problems that blockchain technology solves. At its very core, it aims to remove friction from the market. You might think that sounds a little bit odd, but let me explain. What friction are you on about? Let me give you 3 quick examples. Every time you use a credit card to pay for something, there's a hidden fee that you don't see. Visa, PayPal, and American Express need to make money somehow. This means that businesses you use need to inflate their prices on the products or services they sell to factor this cost in. That's friction. You're paying to spend your own money. Mental. Let's go in a completely different direction. Every time you need a health checkup, I don't know, maybe it itches or something, and you go to the doctors. They'll pull up your records to look over your health history to try and solve the problem. You might be visiting a different hospital or some sort of specialist. It's fairly common that they won't be able to find your records for some reason. They might be lost, or they might not be able to access your information as it's sat with another hospital. That's friction. How about every time a company's let you down and haven't met their end of the bargain? Say your flight is taken off 2 hours late, and then you have to spend hours going back and forth chasing them for some form of a refund or compensation that's been outlined in their terms and conditions. That's friction. In other words, it's removing the middleman who you've got to wait on to make a decision. I'm not going to go into detail on the areas where blockchain technology could help us find solutions, but I will link you to a video in the description below which shows you the key branches you should be aware of. As you'll see, there is a lot more than value exchange going on. Bitcoin is only one part of a far larger picture. At this moment, I see Bitcoin as a virtual representation of gold, and let's not forget, modern day currency was initially backed by gold. So we can see that this technology has a potential to have upside, but I would stress the word potential. We have more than one issue outside of speculation or disruption though. If you wanted to buy the underlying technology, it's a bit like trying to buy a slice of the internet, which isn't possible. If blockchain technology does execute on its upside, then who will be the winner? It's impossible to tell. Think back to the dot-com bubble. How would you have known that Amazon was going to go on to be a winner? How would you have picked out that Apple's or Microsoft's with the rise of computers? There were countless others at the same time doing the same thing. Right now feels a lot like a dot-com bubble, a pot stock bubble, or the potential EV bubble we're currently sat in. By calling them a bubble, it sounds like I don't think these sectors have value, which couldn't be more further from the truth. We are all fairly confident that they're going to have a significant impact on the future, but no one can guess or comprehend on what timescale, how it will manifest itself, and what entities will be the eventual winners. Based on this, I have the following bull and bear cases. My bull case is that I can reasonably see how blockchain technology could provide solutions to issues that we currently can't solve. An example of this is that 2 billion people on this planet don't have access to a bank account due to either lack of internet or physical outlets. With the rise of projects like SpaceX's Starlink, this won't be a problem, but how will they be able to exchange value with each other? The best method could be cryptocurrency. Double this with the fact that fiat currencies haven't got the best track record either. Millions of lives have been disrupted over the years to unstable or even collapsing currencies. This has left people with no safe ways to exchange value. Look at Zimbabwe, Argentina, Peru, or Venezuela for case studies. Fiat currencies are vulnerable due to the availability of printing more of it. Good job we're not doing much of that at the moment. But it's not unsolved problems where I think cryptocurrencies can come in. I talked a lot about friction, and this is why I need a hedge position. Cryptocurrencies could disrupt existing networks, corporations, and potentially even governments. Going back to the friction discussed on debit and credit cards, imagine if companies started to incentivise customers to pay in cryptocurrency, as they'd actually make a saving because they wouldn't have to pay the card fee, but then also they could pass some of this saving on to its customers. I'd be concerned if I was Visa, PayPal, or American Express, and what's even more concerning for me is that I actually hold all three within my ETF. So what's protecting me from this happening? Well, right now, nothing. The last part of my bull case is I still think there's a massive barrier to entry for cryptocurrencies. I class myself as a fairly capable person, and even I find it daunting on how to figure out how to buy and sell cryptocurrencies. This sounds like a bear case argument, but the barriers to entry will reduce over time, meaning there's more upside as potentially more people will adopt it. Can you imagine the inflows if exchange traded funds included cryptocurrencies? So, what's my bear case? The first being resistance from the old guard. We all know that big money makes the world go round, and it's against anything that won't fill its own pockets, governments included. The government, or any government for that matter, won't have any interest in a currency that it doesn't own itself. It's unlikely that any government is going to accept currency in which it doesn't control, well, at least the ones that are significantly sized. Blockchain technology is all about being decentralised and reducing friction. Governments and big money is built on being centralised. That's how they take their massive cut in the middle. This means they'll ensure it can't be fully decentralised and that it can't be used without some level of friction. This could be enough to snuff out any hope of this technology taking off. My next concern is that it might fail to reach a critical mass. For any technology to take off, it has to reach a critical mass of adoption. Similar to any social media platform or transport network, if barriers to entry aren't lowered, then it might never get to this point. People are naturally lazy, stubborn, and love the status quo. So why would they do anything else if it was that difficult to do? Even if we get around these two, we're still going to run into a significant issue even if it does succeed. Can we realistically pick out the needle in the haystack? Do you actually know how many cryptocurrencies are out there? As of January, it was just over 4,000. And cryptocurrencies often fork, which means one is broken into two different currencies. An example of this is Bitcoin has forked 105 times already. 74 of these spin-offs are still active, with a further 31 that have died off. And to top it all off, just like all species on planet Earth so far, 99.9% of cryptocurrencies will go extinct, and I'd be shocked if anybody would argue with that. We see this all the time with any new technology. There's a massive rush, but then we're only left with a few that make it to the top. How on earth are we meant to pick out the winners in this market? On balance of both cases, I can distill my thoughts into 3 points. 1. I believe that blockchain technology has a reasonable chance of significantly disrupting existing businesses. 2. It's impossible to predict who will be the winner. Bitcoin is a runaway leader at the moment, but it's rare in these industries that the leader stays in front forever. 3. There's a lot of different cryptocurrencies trying to solve different problems out there, so it'd be naive just to pick one. It'd be like buying one share in a single e-commerce company back in 1998. This all leaves me with a fairly big exposure in my current investment portfolio. Those of you which are new to my channel, the vast majority of my investments are in a global ETF on Vanguard, and I have zero exposure to blockchain technology or cryptocurrencies. Pot stocks and EV manufacturers aren't an issue for me, as once they get to a certain size, say 2 billion in market cap, they're normally included in my ETF. An example of this is Tesla is now my 6th biggest holding in my ETF, but there isn't any provision for the potential explosion in cryptocurrencies. The easiest way of doing this would be through some sort of ETF which tracks an index of cryptocurrencies. My current thoughts are a position around about 1 to 2% of my portfolio, which may need to be rebalanced over time if it does underperform initially. So what options are out there for me as an ETF for cryptocurrencies? There's actually been many attempts to create this, the most high profile being the Winklevoss brothers, but they have actually been pushed back twice by the SEC over in the United States. I'm exploring different options, such as actually creating my own index with Binance, but there's other options such as Crypto20 that I'm strongly considering. I'm in no rush to create this position though. I want to learn a lot more before doing anything, so I might venture into this around mid-year, but maybe sooner. I would be fascinated to know your thoughts. Are you already investing in cryptocurrency, or have you got a more extreme bull or bear case? If you've made it this far, then a massive thank you from me, as it really supports my channel. I create other content in this channel around investing, finance and income growth, and one video that I like in particular is called 5 Inconvenient Truths About Investing, so why not check it out. That's all from me. Thanks for watching. What am I meant to do? Barney. Oi. What are you doing?